Hey everyone. Good afternoon, good evening. Just thought I'd pop in a whole hour early and I don't know, just show you a little bit of like what I just figure I'd work online for a while. Wouldn't do the live stream officially at 12:30, but I just figure I'd come on and hang out with you guys, see who's on a little bit early. Uh, Good to see you, Miss Puppy Pop. Regular live stream viewer. And yeah, I mean, what an interesting few. I mean, what an interesting year it's been. It's only like January 28th, and between President Trump being sworn in, all the stuff that's happened since yesterday, the AI thing. Now, there's a lot going on. There's a lot going on in the world. And I thought I'd make that the subject of today's live stream. And yeah, like if you want to know like what I do on a regular basis, I look at this. It's the 52-week high list. And yeah, I mean, you can see people are still buying Amazon, Meta, Walmart, some of these like very big cap names. But interestingly, it's not quite big enough to move the S&P 500 to new all-time highs. And remember, I was telling you guys last week, if you were paying attention, I was telling you about the Trump secret trade, and I was talking about those Japanese big banks. Well, guess what? Here we go, right there, 52-week high, Mizuho Financial, 52-week high for Mitsubishi UFJ. And there's only two more, and those will come in good time. In other words, that trade is on. And that trade is on. That trade is definitely on. What else are people bidding up? A lot of healthcare. This is a pretty interesting sort of pivot in the market away from tech into healthcare. And you saw that yesterday. Like, I mean, okay, these are all financials, but Stryker, that is a device company, Boston Scientific, Medtronic. So device companies are very big. Those are three companies, but they weren't in the 52-week high list, and pretty much there were no healthcare stocks doing anything. Fresenius Medical is another one. DaVita is another one. So that's definitely a new trend that we are seeing. So financials, medical devices. Atricure is another medical device company. Yeah, I mean Lensar is one that's in our diamond tier portfolio. And we just added a healthcare company today to diamond tier. We're going to add another healthcare company tomorrow. What's on the 52-week low list? In other words, what are people really selling? Last of my cough, folks. Thank you for all your good wishes and telling me to drink tea and lemon. It's almost over. What are people selling? Well, this is more interesting, especially for all you guys that have been super bullish on these chip stocks. And, I've sat that rally out. The whole AI chip rally, I just never bought into that idea. So we sold out of all our chip stocks too early in some cases. But we made big money with ST Microelectronics, AMD, Rambus. We made okay money with Micron and some of the others. We clearly sold too early with the semiconductor equipment stocks. That was a mistake, but we didn't lose money. We just kind of like didn't make money on many of those. But what you can see and bring this up is what you can see here now is that this sector is being sold. On Semiconductor, United Microelectronics, Amcor, Vico Instruments. So I have music on. I gotta turn my music off. Amcor, Vico, PDFS. These are all semiconductor and semiconductor equipment stocks, and they're being sold. So I would not be buying this dip. There'll probably be like a bounce into which you'll see more selling. That's my experience. That's what I believe you'll see happen. And that is obviously the opposite of what social media is telling you to do, but that's what I would tell you. When I was asked, hey, Paul, buy Nvidia, buy this, and I said, hey, semiconductors are a cyclical business. They're crazy cyclical, and the bottom after the cycle top is 80% lower, and into the next cycle, who knows what people will bid up. So I'm not a buyer of this DeepSeek AI driven dip. I will continue to say that semis are a cyclical trade. The top was in for most semis in 2021. The AI hype mania took a number of them up to new highs. But for laptops, smartphones, and all these things, yeah, I mean, that the cyclical top was in 2021. And my judgment, I know people are going to troll me and come to like give me a lot of crap. That's fine. I will say like this DeepSeek news is legit. It's real. Those models look very good. Based on, again, I'm not an AI tech expert, but I can have access to them on X. And there's a guy named Andrej Karpathy. Let me share this. Andrej Karpathy, who used to be with Tesla. You'll see, like I cited this post, right? And that was from December 26th. That's when DeepSeek actually released their model showing that they didn't really need a lot of fancy chips to run a large language model. Why did the market take 1 month to react to this? Well, I mean, DeepSeek hadn't like released their product yet. It hadn't gotten the world's attention. But a 15, 17% drop in a day, yeah, I mean, the idea that like all these institutional investors are stupid and dumb and they're willing to take 20% lower for Nvidia on the basis of news and they're stupid, yeah, that doesn't jibe with my experience and reality. Institutional investors have access to a lot of information, and I don't think they're just going to hand over Nvidia stock if this didn't have some kernel of reality to it, which is that you don't need super high performing chips to run a large language model. And if that's the case, then you probably, and this is the case that I made with in my Substack, you want to own the technology or chip maker that can spit out as many chips as cheaply as possible. In other words, what you really want is just like the like you don't want to overpay, you don't want too much power, you don't need anything. You just kind of like need it so that you're minimizing your cost, because essentially a large language model type service is going to be some mixture of a commodity and or so specialized that it isn't necessarily like such a big deal. In other words, we'll have a lot of different types of large language models that specialize. I saw one where somebody has developed one for government workers, so it's called Government GPT. There'll be one for math solutions, one for life science solutions, and you can scale those up fairly quickly and fairly cheaply. That is not a scenario by which you would need a lot of very high-end chips. You would need a lot of chips, but most of them would be pretty low end or mid end at most. So if people have bid up the prices of semiconductor stocks with the idea that, well, hey, they're going to have high profit margins for the foreseeable future. No, they're probably going to shrink those profit margins, and there's going to be also a lot more people that can compete to get business for people that are running these LLM models. In other words, you don't necessarily need NVIDIA chips. I mean, we'll find out, pretty quickly who are the commodity producers that are going to benefit. How will we know? Well, they'll start to report in a couple of quarters that they're starting to see a lot of orders come through. And so they'll identify themselves. But these are going to be low margin commodity chips. So very competitive, low margins, not a super attractive business. So my view is that the DeepSeek AI Nvidia stuff is for real, that you wouldn't buy semiconductor chip stocks on the dip. And I'm not going to tell anybody what to do. It's up to you. You want to know our viewpoint, look at the ATG portfolios. We have stayed out of the chip game for the better part of 2 years. We sold out, we stayed out. I'm going to keep staying out. Why? Well, like I said, chips are a cyclical stock. You don't want to own them when things are good. You want to own them when they effectively look like they are no-hopers and they are bankrupt, and you want to sell them when they are essentially look like they're in rude health, which is still pretty much where they are. So everything is sort of like inverted when you are looking at cyclical stocks. Got some comments here. I'll put them up. I said hi here. Is my legit monthly service ATG Digital? That is correct. That is correct. atgdigital.media. I'll put up the, oh my God, my toe is cramping. Oh, sorry. I like to be comfortable, especially if I'm going to be on for an hour and a half. Today, probably 2 hours, just streaming. That's where you'd go. With respect to your question, is there a option to pay for a year and the monthly charge? No, there is not, because that comes with a level of customer service, chargebacks, problems that I do not want to deal with. So you keep your money and you pay me monthly, or you pay us monthly. Our business model is approximately built like Netflix or Spotify, where you pay monthly. So that's how we operate. You can, I always find like that's super transparent. You pay monthly. There's many people that dip in and out, quote unquote, steal our ideas. You know what? I'm not in the business of trying to control people. We're trying to provide a service as best we can, but I think this is a good deal for everybody. You get to keep most of your money rather than giving me money in advance. So yeah. Recent drop in crypto miners gives up a great opportunity. Now I saw this yesterday, and I've been thinking for some time that crypto miners diversifying into AI, I was like, this sounds like a good idea, but I would prefer they stuck to mining Bitcoin or mining crypto. And you can see why, because people are going to argue, but if the DeepSeek information is correct, and the margins in that business have like shrunk because you don't need these powerful computers, and the whole basis of diversifying into AI by the crypto miners was that, this is a high margin business that they can go into when, in the down part of the Bitcoin cycle. Well, yeah, I don't think so, which is the reason why yesterday you saw Core Scientific and some of our miners just get hit hard by 15, 20, 30%, because they've all decided that, oh, we want to participate in AI. And yeah, and they paid the price for it. Now, I think they'll overcome it. as Bitcoin goes up, but I think it's going to turn out to be a mistake, and they're going to have to write off all that expenditure. What's going on with MSTR? Well, let's look. Let's look. My cough increases as I talk. So, I mean, normally it's fine, but so if I know I'm going to get some advice to get rid of the cough, but the truth is that as I talk, it irritates the throat a little bit, and that's one reason for it. So this is the MicroStrategy chart for 1 year on a daily basis. And what you'll see is a peak in November, which is when the Bitcoin volatility, upside volatility peaked. And that's what MicroStrategy trades off of, is Bitcoin volatility. And, note what I'm saying. It trades off Bitcoin volatility. I mean, that's obviously related to price. So what you will see is in that period into 540 is when Bitcoin made that huge move from 60 to 100, right? So huge upside volatility, MicroStrategy takes off with it. Since then, we have not had a big upside volatility move. When we get that, you will see, in my judgment, my opinion, I should do my legal disclaimer and disclosure before I talk much more. You'll see MicroStrategy take off and hit new highs. So MicroStrategy trades off of Bitcoin upside volatility. And that's why it's just sort of like just grinding in a range out there. Okay, let me do, I'll do this again, but let me just quickly do my legal disclaimers and disclosures, because people are asking me questions about stocks and investments, which is that this live stream and the content from ATG Digital is not investment or financial advice. It's presented to you as opinion, information, engagement, entertainment. I mean, some of my opinions, obviously, and views people find pretty funny, and they make sure to let me know. All ATG Digital content, this live stream, our trades, our updates, anything, the Substack, my podcast, they can contain errors, oversights, and mistakes. And why do I put this in my disclaimer? Because you're not guaranteed to make money just because I happen to work for a hedge fund. So I'm like, as they say on Wall Street, at least when I was on Wall Street, you pays your monies, you takes your chances. I mean, I do my work, but doesn't mean that I don't get things wrong. Understand that investment operations have significant risk and lead to the loss of your principal. In other words, you can lose money. The owners, employees, contractors, ATG Digital own, trade, transact the securities that are mentioned in this video, and all content from ATG Digital. We don't take money from any companies or crypto sponsors who recommend their stocks or crypto tokens. This is now a pretty widespread practice among influencers, I suppose, somebody like me. And we're required by law to tell you if we do take money from anybody. So we can tell you, for better and for worse, for gain or for loss, we don't. This is our independent, unique point of view. Oh yeah, this is like all the free content we put out, the Substack, the podcast, YouTube, social media, X, Instagram, Facebook. Somehow, like, my check mark on Instagram and Facebook disappeared because I used one of those like virtual cards that popped up. And so when they went to charge it, it didn't let them charge it. And as a result, the tick is gone. And and like maneuvering through Facebook to try and get them to recharge has been crazy. So yeah, just watch out, folks. That, for people that use my name picture, subscriptions over here. All right, we've got more questions coming up. So Sparta says, great to get updates since 2018. I'm a little hungry, so I might from time to time just dip into these. You might hear some crunching. You might not know this, but I love potato chips. I love savory snacks. Just maybe it's my Indian background. I love savory snacks. Anyway, so if I stop, because if I'm going to be on for 2 hours, I'm probably going to get hungry, especially if I'm talking all the time. Great to get updates since 2018. Appreciate knowledge. What is your belief on the timetable of Tesla and Fannie Mae and Freddie Mac by year end? Well, I think the easy and somewhat useless answer is higher for both. I would expect Tesla to have a very big year in 2025. Can it get to 1,000? Man, I would love that. I'll say it'll get, maybe. I'll put myself out there and say I'll say better than 50% chance that Tesla is at 1,000 come year end. And Fannie Mae and Freddie Mac, I've made a number of videos saying that if they're valued like regular financial companies, and they are obviously released by the Trump administration to become private companies, the numbers suggest it should be somewhere between $30 and $50. That's what it suggests. Now it depends on what capital requirements they are placed on them, what kind of deal the Treasury ultimately sort of decides. I mean, there's a lot of variables, but the market's telling you pretty clearly that the number is significantly higher than where it is right now, and that's my viewpoint. But if you want, like, hey, my general estimate, I would say between $30 and $50. I mean, that's a very wide estimate. It's not a guarantee. It could be lower than that. Could be 12, could be 15. But just, if you take their revenues and you treat them like a regular financial company, you would get to easily $25, $30. And this is, I think, an answer to the question about my subscriptions. Another long time subscriber, viewer, both. I mean, I would, for the most of my time, at those of you who have no idea who I am and why I even have this YouTube channel, I used to have a publisher in what was called the newsletter business. And I used to have 165,000 subscribers for this newsletter called Profits Unlimited for a publisher called Banyan Hill. And that's really how I got my following. Prior to that, I used to be a hedge fund manager, managed, 15, $20 billion. But this is why I have a following. And, there's folks who have following me since 2018, 2019, and even earlier. I just thought I'd give folks that background, because I'm probably having some number of people who just go on YouTube and it's like, who's on live? Let's see. And what are they saying? Like button smash. Thank you, sir. Mr. Anthony Perry, a regular live stream listener. Rashad, another regular live stream attendee. Thank you, sir, for attending. And yeah, let's go. I mean, it's up today. There's been nothing really been said about Fannie Mae and Freddie Mac since President Trump was inaugurated. So I am, I'm eager to hear what they have to say. I mean, we do have, I think, the Treasury Secretary, whose name is Besant, was confirmed, and so I don't think it's like the topmost thing on their agenda, but I don't think it's like the bottommost thing either. I think it's very clear from Trump 1.0 from 2016 to 2020 that they were well on their way to freeing these companies. And I've got to believe that playbook that they have, what they're going to do, is probably mostly the same. It's probably going to be updated slightly because the market environment has changed a little bit. The housing market has changed a little bit. And the political environment has changed a little bit. So all of those three things mean that, like, there's probably some changes, but the basic direction I still think is like, yeah, they get set free. And I would guess 12 to 18 months is the time frame, if not sooner. If Trump wants to cut more rates and Fed wants to hold, do you think this will impact the market? Now, I was looking at rates. I mean, let's let's look at rates here. Okay, and so this is the best proxy for Fed funds rate. It's the 3-month Treasury yield. Oh, I'm not showing the chart. Oops. The Treasury yield. Let me just take your comment off so that everyone can see it more clearly. And then that's over 1 year. And you can see we peaked out somewhere like, around May last year, somewhere in that range. Yeah, I mean, the last April, May, and now we're at 4.2%. So we are about 1% lower. Let's look at this on a 5-year time frame. So, yeah, I mean, we're here. We are back to where we were when we had that banking panic in 2023, which, where essentially now it turns out that the FDIC and the regulators were effectively using the banking system to stimulate a panic in crypto. And people thought that, oh, this is like going to be the next financial crisis. We didn't have that. So we're kind of like back to where we were. Can Trump push rates down if the Fed doesn't want rates to be lower? That's Rashad's question. I mean, we have had presidents obviously advocate, ask, push, cajole, persuade Federal Reserve to do various things. I think that if, let's say, there's some amount of cut in spending by government, that will sort of like bring inflation a little bit more under control. If inflation by itself sort of starts to behave a little bit better, there may not necessarily be a conflict. However, I think one of the things that I would say is that any cuts are going to be small. I don't think we're going to have like the Fed cut by like 1%. I think we'll have a 0.25% cut. You'll have like a wait of a few months, another 0.25% cut. And I think it will come with a general improvement in inflation. So I don't know if there's I mean, I think Trump is going to ask, and Powell's probably going to say no. But then, I mean, listen, whether people understand or not, listen, being the chairman of the Federal Reserve is kind of like a mix of like a economic, financial, political, and social position. It's not like they don't do things for politicians and presidents. So he'll budge a little bit, but he wouldn't want to seem like to be giving in. Thank you very much. Everyone has one life to lead, and you should look and dress the way you want. That's really the end of what it is. And nobody commented about my scarf either. These are I love these self scarves. Let's go back to a point that I want to make about interest rates. I mean, let's look at this even longer term. This is what short-term interest rates look like from 1979 onward, right? And so it peaks out. You can't really see it here, but let's see. Interest rates are like the high here in 1980 is 16.5, 17%, right? And now, and you can see the low is like what, negative, which is sometime in in 2020, and then we stay there. So we're not going to, I mean, some of you might be quite young attending these, but certainly I don't think I'm going to see zero or negative interest rates in the rest of my lifetime. I mean, truthfully, I never imagined we would see it in my first lifetime. But assume that, if a new lifetime starts from zero or negative interest rates, what this tells you is that the interest rate cycle, on a macro, mega time basis has turned. The peak was in 1980. The low was in 2020, 2021. And now we are going to see this in an up and down fashion, sort of like travel towards some new peak, which is going to ultimately be in, 30 or 40 years, something like that. So betting on or counting on low interest rates as being the catalyst or trigger for higher asset prices, I think generally is going to be disappointed. We've had arguably the best environment for asset price increases for pretty much from 1980 to 2020. And from here, there are going to be periods when it's good, but it'll never be as good as it was from like 2008 to 2020. I mean, that was the golden period because interest rates are crazy low. Essentially, there's no cost of capital. It makes sense to speculate in pretty much everything. That was the golden period, if you will. From here, it's going to be just a more difficult period. Why? Because there's a cost of capital. You can make 4% on your money by doing nothing. 4% compounded for 10, 15 years is actually a good amount of money. So you can make money risk-free, and that is going to keep quite a bit of money out of asset markets. In other words, the threshold and the hurdle rate is going to be there. Let's say the Fed cuts even to 3%. It's still going to be, keep a lot of money in cash, in liquid instruments, rather than going to chase riskier investments. Do you think with all the trade wars, Trump will start to lead to a recession sooner? I am not unwell. I got this like allergy thing when I was traveling in Asia, and it stimulated this chest congestion, which I have not been able to completely kick. And then, of course, if I'm talking straight, it stimulates irritation in my throat. So, but I'm not unwell. I just want to make this clear. If I was unwell, I don't know if I could come up and do 2 hours of live streaming, which I'm kind of signing up for by having logged in at 11:30. But to answer your question, with all the trade wars, I don't think that we are going to see as many trade wars as is being threatened. I think that the trade war thing is partly a negotiating strategy, and it's partly a first step towards a rebalancing a trade world that is truthfully out of control. I mean, I'm going to show you some data here that says, look, I mean, the truth is that, let's see. Yeah, let me put this up. Let's see. Can you guys see this? Yeah. Okay. So I'm just going to take your comment off so people can see and get that pop up away. So let me make this a little bit bigger. I mean, you can like, hate, love, whatever Trump, one way or the other, but he has a point. Our trade system is wildly out of whack, and has been for a while. You can see the beginning of the early globalization the modern globalization, sort of like you say, starts in 1990. And essentially it's just continued to get worse and worse with some interruptions for financial crises. It can't go on like this forever. So whatever Trump does is going to be on the margins. You're not going to turn this ship around in a year or in even in one administration. It is going to be a long-term process that takes, just like interest rates, 30, 40, 50 years. We're not going to change the entire system overnight. I It's just not possible. I think anything you see was going to be on the margin. There will be a lot of tough negotiations to try and push things towards something that is lesser than what we're looking at. And that's that scenario. That's not a scenario in which you're going to see, I think, recessions driven by any trade war or of any kind. Why? Because it's not in anyone's interest. It's not in the US interest. It's not in China's interest. So it is going to be where they will move as little as they can, and we will try to get as much as we can. And that says that, we're going to have marginal movement. So that's not a scenario for a recession driven by trade wars. Slippery. I have to say, I love all the remedies that get thrown at me. My mom, who often watches the live streams, she of course is like, "Hey, are you okay?" And I'm like, "I'm fine, thanks. Everything's fine." But she notices all these things as well that's recommended to me. I will have to look that up. I've never heard of the slippery elm, to be truthful. Yeah, I mean, this is a really good point to make. I mean, I'm going to put up a chart of the semiconductor ETF, which, if you were with me at Banyan Hill, we did a lot of trades based on these. I wrote a lot of like free e-letters. That is the chart of the semiconductor ETF. Yeah, you're not buying at the bottom. I just want to make this clear. Yeah, I mean, this is this is from 1979. So I mean, I've been bullish on semiconductors. Yeah, I mean, I think in a fairly big way. I think like by 2016, 2017, about the time I was at Banyan Hill is when I really started to recommend these. I think we recommended ST Microelectronics at 5 or 6, AMD at the similar price. I missed Nvidia as a formal recommendation, but apparently I wrote a number of commentaries, including Nvidia, because a lot of people credit me with telling them to buy Nvidia, but we never actually formally put it into any portfolio. But generally, I was optimistic. We did buy, Micron, and we generally had a lot of semiconductor. I'm not a buyer of semiconductors. Yeah, I mean, why? Well, maybe there's another 50% here, but I don't need to be there. Yeah, I mean, people who bought ST Microelectronics made whatever 400-500% from 5 to 50. AMD, I think, was another 400-500%. Rambus was the same thing. So, yeah, I mean, the last few 100% are the most dangerous. That's my experience. And like you said, yeah, I mean, you don't want to fall in love with a stock. And there's a lot of people that have fallen in love with the idea of AI being like the sole way they can get rich. I am not one of these people. So all stocks you got to sell at some point. And my view has been really since 2021. You can see that 155 peak. I thought that was going to be the peak for this cycle for semiconductors. I was obviously wrong. And the reason I was wrong was that AI came and the hype cycle and mania around AI. People like, this is going to go to the moon and is going to, be forever. And it took Nvidia and a bunch of these stocks up, but many did not make new highs. There was a rally in a lot of stocks, but many didn't make new highs. Nvidia did. Let's look at Nvidia. Nvidia went from 34 to 10, and and it went up 14x from there, 10 to 140. But yeah, I mean, good for the folks that made a lot of money. I mean, I'm always happy when everyone makes money, but I think the point that's being made here, which is you're not married to these stocks. Yeah, I mean, at some point, every stock is a sell. There are no stocks that they're not your kids. Yeah, I mean, not your family. You gotta let go of them, and the idea that you're gonna time the perfect top. Yeah, I mean, I told you, like I thought that was the cycle top in 2021. Turns out that I was wrong. Either way, if you're hung up on that, then that's a failure. But I would tell you that's really not the standard. The goal is to make money. The goal is to make money. It isn't to like catch the bottom and hit the top. Almost no one gets that. Or if you do, it's by luck. The goal is to make money. Sometimes you're going to make 100%. Some you make 30%. Sometimes you make 500%. Sometimes you make 1,000%. The goal is to make money. It isn't to capture tops. But many people are very into that. They're like, oh, we sold out before. And that's human psychology at work. Human psychology at work. I'm just going to keep working here, and you guys can throw questions and go back to what I like to do, which is I like to see what are people buying and selling. Because in the end, remember, it's a market, right? Like I like to go to the farmers market here. In North Carolina, in Raleigh, we have an incredible farmers market where farmers from all over the area come in, and they come in early in the morning, set up, and I love to see like what's going on. And if you are there for a few hours, you can see market dynamics there, which is that prices get changed during the day. In other words, maybe the first seller of tomatoes is like, hey, well, I'm here first. You charge more because all the buyers have no alternative. But then as other folks come in, like, yeah, they're like, okay, time to move the price lower. Why? Because there's competition. Or there's a lot of people with tomatoes or whatever the case may be. So the market dynamics are the same. And people often forget that in asset markets. They forget that it is a market and it is subject to the same sort of movements and behaviors, manipulations, adjustments, whacked out behavior that any market sees. So this is the 52-week low list. There's some interesting ones here, which I mean, here's one of the things like, people always like looking backwards, right? And it's tough to let go. It's tough to take a big, hard loss. Man, and truthfully, I have to say it was tough to like give up on the cannabis trade. But here we go, Kronos, which is arguably the best, at least the best financially capitalized cannabis company, making 52-week lows. Grow Generation, which was another cannabis stock, doing the same thing. Let's see, there was another one that was in there. Yeah, but one thing I can tell you, my experience is this, which is that many people say, I want to buy stocks really low. The truth is that really you don't really want to buy off this list for the most part. The general way that I understand the world based on like experience is that you want to buy the first 52-week high and you want to sell the first 52-week low. I mean, well, you want to, once a stock starts making 52-week lows, it's a series. In other words, it's going to be like there's going to be more. And you can try and time your way into that bottom, but good luck. Most of the time, the reason why a stock is making 52-week lows is because there is a large seller. They're willing to take a price that to someone new that's looking at a stock looks low, but they have a large amount of stock. They either have made money or they timed their way in wrong and they want out. And they're willing to take a price that is lower than any price for the last 52 weeks. that is not a price pattern, generally speaking, that you want to buy into unless the stock has been making 52-week lows for, like, let's say 2 years. And that big seller has been washed out. And this company, again, you're also tracking what the company is doing. And the company is also turning around on a business basis. They're like, hey, our business conditions have bottomed out, things are getting better. Then you'd consider buying off the 52-week low. I'll say that of the buys that we put in now at ATG Digital, I'll say 80 to 90% are off the 52-week high list. That sounds wacky. That may contradict what everyone thinks. Well, why is that? Well, because it's the opposite of the 52-week low list. A 52-week high means that some person, an investor with a fairly large amount of capital, is willing to pay the highest price seen in the last 52 weeks, approximately 1 year. That takes conviction, that takes courage, and that takes capital. So most likely, they have investigated this company, this opportunity, and as they are building their position, they are bidding it higher. And as they bid it higher, you get other people be like, why? Why is this going up? And then they go look and they go, you know what? You're right. This thing's looking good. The business conditions are good. And clearly there's someone that likes it and wants to own it and wants to keep buying more. That's what drives 52-week highs. And 52-week highs, just like 52-week lows, are a series. And they're a series because it underpins certain human behavior. And I've seen this on Wall Street when I was a hedge fund manager, which is many people think, oh, everybody there is doing independent research. That's not true. Most of Wall Street is copying what a few sort of like thought leaders are buying. There's thought leaders in different parts of the market, obviously for value, for growth, for biotech, for tech. But whatever it is, most people are not following some original research. There are some thought leaders, and people copy them. And word gets around pretty quickly. Oh, XYZ fund is doing really well. And they're like, why? Oh, they bought into this stock very early and they made it a big position. And then the portfolio manager says to the analyst, well, why didn't we have that? And then the analyst gives some excuse of some kind. And then, next thing the analyst sees is, when you're an analyst, and I was an analyst on Wall Street, you get all the trades every morning. And what you'll see is like, oh, the portfolio manager went and bought the stock without asking you. And then, like, of course, you're tasked to like actually follow it now. So that's actually the way. There's a lot of copying that happens. So when position by one of these thought leaders gets built up, they're bidding it higher. So that's the early 52-week highs. And then as, again, the company the stock starts to do well, it attracts the attention of the copycats. First, like, there's one layer of copycats and there's a next layer and then a third layer. And that buying just builds upon itself and keeps going. So you can shortcut yourself by just really, forget trying to bottom tick things, because my experience is really tough and you're going to be wrong a lot. It can be rewarding, obviously, but buying off the 52-week low list, we do it at ATG Digital very infrequently. Buying off the 52-week high list, we do actually quite frequently. Now, of course, like, I'm not going to go buy Amazon and Meta. Why? Well, people don't subscribe for people to, I mean, for someone like me to recommend Amazon or Meta, I mean, you'll be like, what a fool. I mean, why do I need this idiot? Right? I mean, you want something that is slightly different. And the truth is that even though I'm telling you like, hey, this is what we do, the vast majority of people, the 52-week high list just fills them with dread and fear. Because generally we are backward looking. Generally we are Like, oh my God, I don't want to buy at highs. What if it crashes? So you want to put yourself in the hands of somebody that has had experience, understands like the what's going on, and yeah, so that's in there. But this is like what I like to do, and what I'll do is identify stocks that are early. Like one of the columns that I will look at is how many 52-week highs. Okay, here. So how many 52-week highs has a stock gone through? So you'll see there, okay, it's this column here that says 52-week high. So it's what? Like it's after the 52-week high percentage high. It says 52W high. So Boston Scientific has had 76 52-week highs. GoDaddy 71, Walmart 68, Endeavor 64, Shark Ninja 60, Royal Caribbean 55, Redwire 55. In other words, these stocks are being regularly bid up by investors. Yeah, essentially, like if you're imagining like an open air market and there's like a vendor of each of these stocks, there's a buyer coming pretty much every day, buying, and not just buying and paying a higher price, which compared to last year's price is like, a new high. That's conviction. That's courage. That's also capital, right? Because as the price goes higher, you need more and more money, right, to build your position. So this is what it's like. If you want to buy things, shop from the 52-week high, folks. Yeah, from time to time, you're gonna get like a loser, but you're less likely to get losers, right, from by shopping on the 52-week high list than from shopping on the 52-week low list. And I know I've laid out why, which is that these stocks are being actively being bought, and in the process of being bought, they're being bid up. And the idea would be that let's say I flip this. So I mean, some of these are very small companies, but the idea would be that when stocks first arrive on this list, like the Citizens Northern. Now remember, I'm not telling you to buy these stocks, and it's not financial advice. But you start to see this start to appear, you would then go investigate the business conditions and the financials of the company. And what you want to see is that you want to see that the business conditions in the financial of the company are on an upward track. In other words, the folks that are buying actually are not just like throwing darts. They're actually looking at the company. There's something going on at the company that they understand. It is improving. In other words, what's going on at the company is up and to the right, and then the stock is following. So ideally, if you start buying when sort of things first enter the 52-week high list, so like, yeah, Citizens Northern has been on the 52-week high list for 3 weeks. Now, I don't really know that company, to be truthful. I mean, I'm just putting this list up, and anybody can go onto bar chart. This is not proprietary information. However, what it's hard to do is like you'll see that as you go to do this, and then you go and look, okay, and you look at a chart. I mean, let's look at Medtronic. Let's look at Medtronic chart on a 1-year basis. Right? I'm just going to put this up. Okay. Yeah, you see that? That's a scary chart to buy as a short-term trader, right? I mean, it's gone essentially from $78 to $93 in the space of, I mean, what, like about a month. Most people fear short-term volatility irrespective of the long-term opportunity. So most people are not going to want to buy that. Most people are not buy that. Now, I mean, I wouldn't necessarily like, there are also some like small little things that I would tell you matter, which is like, you see this movement here. You see this here. Let me inspect it. You see this here, this gap up. That's always something that I try to avoid, because gaps up, unless they are driven by something that is so new, so significant, so eventful, oftentimes indicates that like market makers are taking advantage of short-term enthusiasm from retail buyers. Sometimes it's short covering, and that buying is not sustainable. And so the bid up buyer is sort of like not, there's not like enough of them. And what happens often, but not all the time, is that you will see the price track back to this gap higher. And that's because once this price is hit, they've essentially sucked in all the buyers that either have to buy, you're short and you have to buy, or else people that have just been like, like, oh my God, it's going to the moon, and it's in some chat room or something like that. All those buyers are gone, and now there's just no more demand. And with that, as sellers come, the price will track back. So you can't use the list just purely off the list. You do have to have some understanding of company financials. You have some understanding of market psychology, market mechanics as you go all to do this. And so, why talk about this? Why give out all of my secrets, if you will? Well, as you can see, I mean, it's a lot, right? I mean, you gotta like be tracking like everything, all the time. Like I would not put Medtronic into our portfolio. I might consider it back at, when it goes back to 82. Um, because that's just like for a very large company. Medtronic is a large company. I mean, it's got, let's see. This is a $117 billion company. Okay. Apple is a $3 trillion company. It's not as big as that, but nonetheless, a $117 billion company, which has just, gone up by 30%. I put myself in the place of like a institutional buyer and be like, okay, let's say, my sales estimates are going up, but they're going up from 10% to 13% because it's a fairly large company, or let's say even 15%. Do I really want to pay 30% more than what it was trading for? Unless I think that the estimates are going to go from 20% higher to 30% higher to 40% higher, probably not. I'm certainly not wanting to pay 30% more if the estimates are only going up by, I don't know, another 5 or 6%. So what do I do? If I was the one like that bid this thing up a little bit, I'm going to hold back a little bit and be like, this is going to come down. There's going to be a pullback. There's going to be a correction. And then you'll fill your position out slowly. So there's so much that goes on in markets that is very different than the internal conversations that we have. Right? I mean, we are so inside our own brain, inside our own market psychology, inside our own fears, inside our own greed, if you will, that we don't think that there is a market, there is a market maker, there is another side, and they don't care about you. They don't care about your trade. They're all going about their business in their way. And if you don't consider that, then you often put yourself in a position where you've gotten yourself into something. It doesn't do what you wanted. You bought this instead, like, okay, and you bought, most people tend to buy near highs. Why? Well, because at the high, it seems the most likely, short-term traders will buy at the high, think like, look, like if I just look at that chart of Medtronic, right? I was going to go. People will say, technical traders like, it's a breakout. Well, it's not like this idea of a breakout is not known by market makers. It's not like the idea of a breakout is not something that they might choose to manipulate to suck you in and just rug pull you, right? I mean, these seems only unthinkable to people who don't consider that, like, hey, there is another side. The markets don't exist for you to make money. They're not optimized for you to make money. I mean, you can make money, but generally speaking, like there's also, other people that are looking to make money. And on a day-to-day basis, on a short-term basis, markets are oppositional. In other words, when you lose, they win. When you lose, they win. All right. Let me go back to um, um, since it's 12:30. Welcome to the official uh, Tuesday live stream. I got on at 11:30 because I've been thinking that, how do you show what you do to people? If I was, I don't know, if I was an artisan making something, I would, like on YouTube, there are all these people that make things. Well, okay, you're on a cooking channel. They show you that they know how to cook. They show you their cooking. They they give you the ingredients. Then they show you, you pour this in, you do this at this time. For how do you do that if you are a financial expert? Kind of hard, kind of hard. I mean, in the short term, of course, you can just throw out picks, but it's hard to convey information because there's so many different levels to it, right? I mean, there's the macro level, interest rates, economy, currencies, trade policy, all of this. Then there's, news and events that cause volatility. Then there's business fundamentals. Then there's technicals. Then there's market psychology, market mechanics, and they all have to be sort of like considered as you go about, doing this in some way. So, for those of you who are joining me for the official part of the live stream, um, let me start by just redoing the legal disclaimer and disclosure again, which is that this live stream is not investment or financial advice; it's opinion, information, engagement. Not everything is guaranteed in life, so whatever I say, check it yourself. You're not guaranteed to make money just because you heard it on this channel. That's the essence of that. Next. We own, trade, transact, and securities and mention this video and all the content from ATG Digital. We don't take money from people to recommend stocks or crypto. Here's all of the sort of like free content we put out. I really recommend the Substack. The Substack has a really good track record of putting ideas in front of people well ahead of time. Fannie Mae, many others. And there's no games that are played. We don't be like, hey, subscribe to this and we'll tell you the name. No, we give it away. We don't give it away. We tell you the whole thing. We don't try to manipulate you into trying to get you to subscribe. We hope that if we give you enough value that you'll want to. And this is all the social media. And if you want to subscribe, I'm going to put this up. But I made this live stream because there's a lot going on in markets. And the most important thing that happened over this weekend where there was, let me put up my Substack and go over some of this with all of you. So what happened this weekend is that we had this piece of news just kind of came, at least for most people, out of the blue. Well, it turns out, though, that people knew about it about a month before, but this new AI agent released from China called DeepSeek was released. And based on all the metrics and benchmarks, DeepSeek is at least as good as ChatGPT, if not better, and also many of the other AI agents that are US based. Claude is one. It's competitive with Grok, which is Elon Musk's XAI LLM, and there are many others. And the reason why this has been a big deal is that everyone, including me, just imagine that US AI, in other words, artificial intelligence built and created in the US, in the United States, was at minimum 5, 7, 10 years ahead of anybody. And that has been true. Like the AI agents out of Europe are terrible. Really have been terrible. So it is a complete shock that number one, there is an AI agent that is better, equal to something that we've created, ChatGPT. But the bigger shocker is that by most people's reckoning, and there are people claiming that, oh, look, these are all lies. But I continue to read on this, and based on technical papers, they can confirm that the spending required to build the DeepSeek AI technology would not cost very much. So it's not just their claim. They're going back and doing this and saying, hey, we've gone and read through the papers. And if you want to go and implement this form of LLM, it would not cost you very much. That's a truly stunning. In other words, ChatGPT is built on $5.4 billion per year. I mean, wow. And this DeepSeek was built on 5.6 million. Yeah, that's about one thousandth of the cost. One thousandth of the cost. This news came out on Sunday, and I started to post on X about it. And it didn't surprise me then that Nvidia stock promptly on Monday crashed by like as almost 20%. Why? Why does that? At least, I know people are going to hate me for this, and you can troll me. That's fine. Why does that quote unquote make sense? Well, because the idea behind Nvidia trading at whatever 50 times sales, is that anyone that wants to build an LLM model, an AI model, would need to buy huge amounts of Nvidia or Nvidia equivalent chips. But if these DeepSeek folks are right, and again, it's not just them claiming they spent 5.6 million. There are AI experts looking at their technology and be like, yep, what they've done is this. It would not cost very much, etc. That means, and remember, and also like the DeepSeek AI code is open source. They have released it to the world. So you can go and use this AI model and apply it based on, much cheaper chips. So there is a very real world practical impact of this that is going to be felt, where prior to this, everyone's like, hey, we need the most elite level chips. Now it's like, whoa, you can build this cheaply, and there is this, and it's different technology to ChatGPT. You can use this alternative way, and on the cheap, you can build a very effective AI system, specific maybe to a particular field, a particular niche. In other words, large language models like ChatGPT are going from something that were considered to be so unique, so different, so high value, partly because of how much resources they cost to build it, to something that is going to be a commodity. A commodity. A commodity is something where it's pretty cheap, it's widely available, and anyone can kind of like come up with it. That is night and day from really what was believed all the way until Friday last week. And yes, I'm aware of all of the theories that people are telling, and people write like, oh, it's not a surprise that China released this. The Chinese hedge funds are short Nvidia. Yeah, listen, folks. I'll actually show you a. Let me see. Did I like this guy's tweet? I think I did. Let me see if I can. I think I bookmarked it. Let me see if I can find the bookmark of this guy. Well, I don't remember. Let me see. Bookmarks. Bookmarks. Here we go. Here, bookmark. Okay. So this is a AI tech expert that has gone through the technology and like, hey, it would cost a lot less. So um, you can go and essentially go through the code, and you would not need elite level chips to run it. So whatever the conspiracy theories are about one or the other, the DeepSeek R1 model looks legit. You can go and test it out yourself. And to test it, you don't need a bank of like, yeah, the most fastest, bestest chips from Nvidia. You can run them on fairly standard equipment. That's a game changer. And it is almost certainly going to change the demand for the kind of chips that you need for AI. Previously, it's like we need the best, we need the fastest, we need it to like have, the greatest capability. Instead, it's like, well, no, we kind of need them to be cheap and we need a lot of them. Those are two different business models and they're two different propositions. One proposition was the idea there's unlimited demand for very high-end chips, mostly made by Nvidia. The second proposition is fairly commodity level chips that somebody can spit out pretty fast and a pretty cheap price, which is, then you'd run this R1 model. And that is essentially just going to deflate the margins associated with LLM AI. And that is why Nvidia stock is down. It's why any of the other stocks are down. So that's sort of like market agenda number one. Market agenda number one. But one of the things that we saw yesterday, which is interesting, is that it was interesting to see as Nvidia was selling off and as this like AI, oh yeah, I mean, I'm going to get myself in trouble. People are going to troll me. This AI mania hype / bubble sort of was starting to like come apart, is what was looking to be bid up. And very interestingly, biotech, life sciences, yeah, there was like a really strong, like I could see it like in what was, on the 52-week high list. People were starting to move money away from tech, move money away from AI into other parts of the market. So there is a clear sign that money is starting to move away from this very AI driven, like, again, in my opinion, hype mania to other parts of the market. And arguably the most like least owned part of the market is life sciences and biotech. So that's market agenda point number 2, which is that it was setting up for a while already, but this DeepSeek news has really like made people be like, hey, I think it's time to get out and it's time to move to something else. And the place where you're going to get the biggest bang for your buck, of course, if you're a buyer, is going to be like where people don't own anything and where there's not a lot of liquidity. And then like, you buy these companies and then you're early. And then, I told you like the key opinion leaders kind of set the agenda and other people copy. So I think after like a year of waiting, I think we're on the cusp of a big shift in market preferences away from AI, away from tech, and into, at minimum, I'm going to say, like, I think life sciences and biotech are a clear place where people are going to move into. And I think we'll see more and more signs of where money is going to be pushing into as they exit out of the AI tech hype mania cycle. So that's like agenda point number 2 that is going on. And one of the things that, excuse me, that I pointed to, which confirms 2 things. One, which is market agenda point number 3, is that the AI hype cycle, bubble, mania, whatever you want to call it, was very focused on very large tech companies, Microsoft, Meta, Google, many of the others. If people are no longer buying those and you're looking for to places to go, and they go into smaller cap companies that point to like where the AI trade is going. Like I don't think the AI trade is done. I think there is almost a desperate desire, want, need to invest in AI, and I don't think that's going away. I think what you're really going to see is that money start to leave the big tech area. Now they have a reason to leave it. It's like, hey, somebody's built a much cheaper model that people can copy. It commodifies the thing that we thought was super valuable. So there's a logic to this. And then there'll be new logic that's like, okay, well, what's going to drive this from here? And in my Substack yesterday, and I really recommend people subscribe to the Substack. I mean, because we put out good information on a timely basis, as well worth subscribing to, even if you don't subscribe on a paid subscription. And I said, like, well, if lower grade chips are sufficient for AI development, which is what this DeepSeek R1 model is pointing to, then the real winners will likely be companies that spit chips out as quickly and cheaply as possible. Now, those of you who were, been with me for a while, remember Nano Dimension. Now, this is a stock that's gone cratered, partly because it's small, partly because it's 3D printing, partly because there's been like a big shareholder fight, but they are very much in that game. I mean, 3D printed chips, which they can just push out. I mean, that was instinctively, as I thought about the news, as I was like posting on X, I made me think like, I think Nano Dimension is a stock that would benefit obviously from investor interest, but then they would actually have the business that would be like where their products and services would be in demand in a world of commodified large language models, where you've got a lot of them versus one dominant one, which is the model that we were under. ChatGPT is going to rule the world and be the dominant AI company for a long time, akin to the way Google dominates search. That's not the way it's looking. It instead looks like AI will be widely distributed, will be much more democratized, much more available, and there are going to be a lot of winners, many of whom are going to be quite small. And our goal at ATG is we're going to try and find them, right? I mean, we're going to try and find these because, yeah, I mean, if a lot of people can take the same sort of like recipe and just put their little spin on it, and where it creates value for their particular industry, sector, niche, then the winners of AI are going to be a lot of different small companies, potentially like Nano Dimension. I mean, they would be in the chip area, but that would be market agenda point number 4, which is that there is now a reason to move away from this obsession with very large companies, which has been ongoing for 3 or 4 years, and now to go and hunt down like, hey, who is going to be the market leader in AI for name your sector? Maybe it's for business intelligence. Maybe it is for genetic data. Maybe it is for clinical trial data. Maybe it is for optimizing, something for space. Maybe it is for optimizing for a fairly small application, but that has a big impact in a certain industry. In other words, we're going to have a lot of different smaller companies, and that's really where the AI trade is. That's where the AI trade is. Now, it's very early days. It's very early days for this, but I believe that what you're going to see over 2025 is like these market agendas start to move money into places, and people will obviously, there'll be a mix of, companies that actually have a business, and then there'll be hype cycle mania trades as well. Both will make money, and both, of course, will show up on the 52-week high list as people bid it higher. I mean, just like, we saw that mini craze for quantum computing, which is, after Google had its announcement, that's like a hype cycle mania trade, right? And you want to differentiate between the two. A hype cycle mania trade you can identify because they don't really have a real business. This is just like, investment bankers, market professionals, market makers seeing, retail enthusiasm and, some amount of institutional professionals and their enthusiasm for higher stock prices and marketing what they want and, constantly bidding it higher. A real company essentially can point to rising revenues, a pathway to better, newer products, etc. And those are, where long-term investors will go. Both are worthwhile. But I think we're going to see a whole slew of new companies. I think there's going to be an IPO cycle that is going to be huge as investment bankers go out there and be like, hey, yeah, you've got this LLM model that's good for genetics or biotech or clinical trials or for energy optimization or this or that and the other. It's time for you to go public. And there is this huge demand, huge desire among everybody, I'll say both retail investors and professional investors, to not miss AI. People are like, I missed Netflix, I missed Google, I missed this, I missed that. They're like, I'm not going to miss out on AI. I want in. So that underpins the human behavior that I believe is going to drive this cycle. And that is like market agenda point, if you will, number 4, which is that we've now got like an inflection point, a pivot point driven by an actual piece of news that is being vetted by experts and telling you, hey, this is real. And now what you will see is people take this model and implement it, and that will prove out its reality. So then, whatever people think, it doesn't matter. And, people chase stocks, right? So once, people start to see that, whatever, let's say it's Nano Dimension, maybe it's some other companies. Hey, this is the new AI stock to own. Waves of people are going to come and bid it higher. And yeah, I mean, Nano Dimension is this tiny stock compared to Nvidia. Nvidia, even after a 15% drop, is worth $3 trillion. Nano Dimension is worth what? I mean, this is a ant. Yeah, I mean, it's a $539 million stock. So yeah, Nvidia is 60 times bigger. Yeah, if you're a portfolio manager, right, you're like, man, where can I get, good bang for my buck? I mean, this is a real company. They do have real products and services. Yeah, let me get some, right? And you have waves and waves of buying that drive that. I mean, full disclosure, Nano Dimension is in our diamond tier portfolio. So if you want to accuse me of pumping it higher, hey, I stand guilty as charged. That's all fine. There's no way to talk about stocks without potentially being accused of that. But that's, what is going on. I believe we are at an inflection point, a pivot point, where we're moving away from a lot of the trades that have been running for a while. There is a real event, real news that is going to cause a market shift. And come year end, there will be an entirely new set of winners for AI that are much smaller. Some of them will be new companies, new IPOs. We'll be keeping track of that. Some of them will be older companies that people will be like, hey, they benefit because of this. But bottom line, new direction setting up right now. We can starting to see it already. Starting to see it already. All right, those are my comments about what happened over the weekend. DeepSeek, Nvidia, AI, all the above, and what's going to happen. Quick mention about Bitcoin, which is that, let me put this up. Let me see where we are. Bitcoin is at $102,000. First of all, I just want to just say, like, hey, folks, how incredible is that the Bitcoin is just kind of like trading there over $100,000, just, just $100,000. Yeah, $100,000 in 2020. Yeah, which was what, about 4 years, 5 years ago, it was at 3,500. I mean, yeah, that was the low in the 2020 crash, 3,500. If you bought it when we first told you about it, it was about 10,000 and it promptly crashed 3,500. Either way, you've made, I don't know, between 5 to 10 times your money, depending on what you did, what you may or may not have done during the bear market. But all of my research points to this. Let me see if I can get the right chart up. Let's see here. Bitcoin cycles. So we are just at the beginning of this post-halving run. So these lines here, the orange line is the halving date. The green line, which of course now, it all looks very small and unimportant, but that's because of how much the price has gone up. That's the beginning of the post-halving rally that happens on a cyclical basis after every halving. So this is the 2016 halving, which peaks out at about, the 2016 halving peaked out at about 20,000. Then we had the 2020 halving, which peaked out at about 70,000. And now we have just gone through 2024, and we've got about between 10 and 11 months left of this post-halving cycle, where I have forecasted, theorized, predicted, if you want, that we will see a peak somewhere near $1 million before we have a post-halving collapse that goes back to $250,000, $300,000. That's what all of my study of the cycles that we have gone through thus far point to. So we're on the verge of if when Bitcoin makes my cycle high numbers, I think the world is going to go a little mad, and everything will be about Bitcoin for a little while, kind of like what it was in 2016, but on a much smaller basis. But like today, we have Bitcoin ETFs, we've got MicroStrategy, we've got President Trump talking about a strategic Bitcoin reserve. There's a number of states that have talked about, building a reserve. And remember, people tend to want to buy into these big milestones. At $1 million, everyone will want in. Everyone will in. We chase price. That's who we are as people. That's how human beings operate in markets. We chase price. We tend to be in somewhere near the peak. That's what causes the peak. Everybody kind of like rushes to buy around the same time that sets the peak. So we're setting up for the best period, really, starting February. That will be what? 9 months. That'll be the 10th month since the halving. And based on previous cycles, which you can't really see here, but you can kind of see it. The green line to the red line is like the peak. This is where you see the biggest gains, where you get 50% gains per month. Some months even 100% gains. Maybe it seems unthinkable today for 100,000 to go to $1 million in the space of 10 months. But just remember, once it goes to 200,000, a double from 200,000 is 400,000. A double from 400,000 is 800,000. And you don't need, you don't need $5 trillion to do that. Why? Because Bitcoin is finite, it's scarce. A lot of the people holding Bitcoin are just hodling it. A lot of the Bitcoin hasn't moved for 3 years. So to extract Bitcoin out of these hodlers, you're going to have to bid up. You're going to have to bid up. People are going to want to give that up. And if there is none, there's no choice. You will have to bid 50% higher, 100% higher. That's what we saw in 2016. And that's what we saw to a lesser extent in the 2020 cycle. I'm expecting this cycle to resemble 2016. And the reason for that is that the market's changed so much. In the 2016 cycle, we had some game changers that had sort of built out from the 2012 cycle. The emergence of Coinbase, Kraken, Binance, GBTC had just come on the sort of like scene and was now starting to get a lot of money. So like the first wave of institutional money was 2016. 2020, we really didn't have like a big new institutional wave, but in 2024, 2025, we do. The ETFs, MicroStrategy, the genuine interest of countries to accumulate Bitcoin. All these are huge, huge demand shifts that are not priced in, and past cycles say that they will be. All right, I'm going to end it here, and I don't see a lot of new questions. So let's see what Stuart says, hey, Paul, you are the reason I started trading 5+ years ago. So thanks. Question, what do you think of AI play Kratos? Without looking at Kratos, I'll say like, well, that company's been around a long time. So I think for them to claim they are an AI company is a little bit to play on the hype cycle by itself would disqualify it. I don't like, generally speaking, I'm very suspicious of companies that advertise themselves. Hey, I'm AI, come and invest in me. That is an attempt to pump the stock. But Kratos by itself, for what they do, their basic business is pretty decent. I have not owned Kratos in any of the ATG portfolios. Let me just quickly put it up and see if I can. This is just essentially a defense company. Just, let's just be real. And, you can see that since 2025, maybe because people are believing the hype about Kratos being AI, they've gone to bid it up. I would be pretty suspicious of that. And I would, not think of them as an AI company. I would think of them as a defense company. Let's see. Here's my mom. Hey, Mom. I got on early today, but my mom's a regular and loyal live stream watcher. Whoa, you started an hour early today. We'll have to catch up later. Why are so many folks freaking out about XRP? This is a really good question. XRP seems to just have the largest number of social media haters. But hey, it's doing just fine. It's at $3.16, which is what, like a huge move from where it was earlier this year. And I'm still bullish. It's gone from what, 50 cents at the election to $3. So, people are freaking out. I don't know. There's all this kind of crap that's written out about the XRP. They are campaigning against the Bitcoin reserve, that they this, that, and the other. I put out a couple of posts about XRP that I'll share here, which is that make this a little bit bigger, and I'll read some of these out, which is that the hate for XRP is kind of mind-blowing. Also makes me very bullish. Hate, pessimism, bearishness based on emotion, in my experience, is like a rocket ship ride for most assets. Why? Because usually it indicates people who are short people who don't own it, and into a big price increase like stimulates both involuntary and voluntary demand. So that's one of the things that I've noticed. Second, I also said that in my experience, you want to own the thing that is hated. And more that people like where there's a lot of like emotional hate, which you can see on X, which has the most, active crypto sort of audience. And then finally, I wrote that um, if one of the things that I made when I made my XRP video, I think in October, I said that they can reach market cap parity with Ethereum, which would suggest about 120% upside from here. And this is like, yeah, all the other stuff that is in there. So to answer your question, why are they freaking out? I don't really know. Probably because most people don't own it. It has taken some real diamond hands to hold on to XRP. And many people, my guess is, were very hopeful at some point and then sold out. And now they're not in it. Yeah, they've got some serious hate for it. Any thoughts on how the US move away from globalization will impact Tesla with its strong presence in China and Germany? Yeah, I mean, the nature of the globalization that, let's say, Trump is talking about is that we don't want you taking things that were produced over here and arbitraging labor costs, environmental regulations, labor regulations, business rules, copyrights, patents, going and producing it over there for dirt cheap and then exporting it to the United States. In other words, we don't want you to arbitrage that. Tesla does the opposite. I mean, they make cars in Europe, they make them in China, and they make them largely for that country. They're not arbitraging all of these things. So the move away from globalization has a particular skew direction, which is that we have seen US companies say, hey, guess what? Well, because of either cost of living differences, et cetera, we can go like make it over here. And obviously, we'll then ship it over here. That obviously destroys businesses' jobs in the country that is receiving these very low cost products. That's the kind of globalization that we're trying to move away from. We are not trying to move away from where people just trade with each other. It was never envisioned by the original way of globalization that what we currently have today is what we would get. Instead, the idea was that, hey, you will actually buy our products and we will buy your products, right? And that was the original goal. Not like, oh, the US buys a lot of this, we'll make it over here for cheaper and ship it here. Yeah, that was not the original conception. The idea was of a win-win trade where like, hey, you desire what we have, you make something that we desire and we trade. That is not where we are. So Tesla would not have an impact unless this got really ugly in some way and where China says, oh, hey, Tesla, you are an American company. And even though you produce for the local marketplace, we are going to have some punitive kind of punishment for you for being an American company. If it gets that ugly, I think like, yeah, we'll have to see. I'm not expecting it for that to be the case. The reason is that we live in such a globalized world already. What we are going to see is a movement on the margins to make the global trading system a little bit more balanced. This is going to take 20 or 30 years. It will not happen in a day. It will not happen in a week. Won't happen in a month. It will take some time. There will be a lot of very tough rhetoric because we are at some extreme. If you watch the earlier part of this live stream, you'll see I put up a chart showing the global trade balance. What you see is that essentially nobody buys anything American other than, buying treasury bills. And we buy, pretty much everything that's made in the world is kind of like shipped here. That's got to be righted. That cannot continue forever. that is at an extreme, and but we're not going to be able to turn that around in like a year. It took 30 years, and it's probably going to take 10, 15 years before we start to have a significant impact. So it's going to be on the margin, but it doesn't mean that there's not going to be rhetoric because, you think China wants to change? No. Do you think Mexico wants to change? No. Nobody wants to change. They're all comfortable with the current sort of like status quo and consensus. But I don't like Tesla makes the cars that are made in Berlin go to Europe. The cars that are made in China either go into China. In some cases, they go to Asia. In a few cases, they do go to Europe. But the Chinese cars don't really end up in the United States. Why? Well, because they would have to pay some duty and tariff. And I think the Tesla employees and other people in this country probably want that to be the case. Do we really want Teslas to be made in China and shipped over? Yeah, no. I mean, we would then like gut the manufacturing and production capacity, of our country to make cars at all. I don't think that's a good thing. So that's a long answer to your question. Okay, I've been now live streaming for 1 hour and 42 minutes. I think by a lot, this is my longest live stream. Do you want to say, hey, if you watch the live stream, I talk about how we do what we do, why we do what we do, and who we serve. I mean, ATG Digital, we serve regular people. We don't really have big professional investors. I mean, I'm sure there are a few financial advisors that are subscribers, but we serve regular people. Why? Because that's who we like. That's who we want to. So, trades, updates, all come through. We do a lot of stuff for free. A lot of this live stream is educational because at one point in time, I was, in the same place as you. And over 30 plus years, I've just accumulated a lot of observations, a lot of understanding of how markets work. It doesn't mean that I get everything right, but you can see if you go and look at our portfolios. I mean, people are making money. People are making money. So consider a subscription to ATG Digital. If you want to try us out, you can also, the Substack is completely free. We don't charge for that. So check us out. All right. I am going to end this live stream here unless anyone has more questions, comments, etc. Going once, going twice, going thrice. No, no, no. Well, thank you all for attending this live stream. I'll be on next week. Probably I'll come on at 12:30. From time to time, though, I am just going to come on and work online. So subscribe to the channel and hit that bell, and that will tell you when I'm on. And sometimes I'm not going to stay on for an hour at a time, but sometimes I'm just going to work online just to kind of show, like, what do I do? How do I do it? Why are we doing what we do? If you're on and you have a question on what's going on in the market at the time, I'm happy to answer it. I've seen a few additional comments come in. Vikram wants to know about MSTR. Please watch earlier part of the live stream where I answered it. So check that out. Some thank yous. Thank you for attending the live stream. I like to always show my affection and love to all of you. So this is Paul saying thank you and